Hello everyone, welcome back to Upside Down Data. Today I want to talk about Bitcoin and whether or not it's flashing bearish warning signals. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. So I want to start off this discussion about whether or not Bitcoin is showing some concerning signs by looking at our Trend Confidence Indicator, or TCI. The machine learning based model we have here at the channel that basically gives an indication of how confident we should be in a given trend. The idea is that if you're in an uptrend and the TCI is above 0, if it's green, that means we can be relatively confident in that health of that uptrend. But if we're in an uptrend and the TCI is red, like what happened here, it means we should be concerned and that a correction to the downside might follow, like happened in going to the summer of 21. But if you're in a downtrend and the TCI flips green, that might suggest that upside is nearing, and that's exactly what we saw, is that the TCI acted as a very much a leading indicator for this pump that we saw in the summer. And so more recently, the TCI had flipped green early February, actually, and had stayed green throughout that whole time. So kind of as we were on this slow uptrend, the TCI had been green that whole time. And a decent amount of upside was realized, right? You know, going from below 30Ks up to almost 50K, you know, at the highest here, you know, high 40Ks. But then what's been concerning more recently is that we flipped back into the red and we've been staying down there, right? We've kind of just gone into this place where now the TCI thinks that the way that Bitcoin's acting right now looks more like a downtrend to it than an uptrend. It looks more bearish than bullish. And so we've realized some downside potential already since flipping into the red. And if we just look at some of these other times we flipped into the red recently, you know, a decent amount of downsides followed. Now here it was just temporary downside before reversing back up. But here it was a protracted downside. Here, very much protracted downside as we went in. So this isn't a guarantee we have to go into another one of these, but certainly this is a point for the bears, right? Because you don't want to be, just looking at the past, you don't want to be in the red with the TCI on Bitcoin. That's flipping red, is nothing good comes of that, at least in the short term. And so this is not something that is good to see. And so if we were to get a kind of a correction down from here, that would be totally consistent with what the model thinks is plausible. So something to just keep an eye on. That's something I'm going to be keeping an eye on. And one of the nice things about this model is that we can actually probe it to ask it what price level should we be watching before we might be able to kind of flip back into a more bullish standing. And it thinks that around the 43, a little less than 43K range is a kind of a key level to watch. That if we can reclaim that convincingly and start closing above there, that might be a suggestion that kind of positive momentum is re-entering the space. We might be able to stage a bigger move back up to the upside. But as long as we stay down here, it's not really going to believe any pump. So any kind of short-term pump like we had here, it didn't really get out of bed for that at all. It didn't really get very excited because we weren't really getting anywhere near the level that we would need to get to be able to start believing that kind of price action. So right now, kind of the model is more or less fading any kind of pump until we can get above this critical level. So something to watch. And another thing that's concerning that Bitcoin is doing right now is it's acting a lot like it's acted in bear markets in the perspective of the momentum bias indicator. This is an indicator that basically just indexes the basically which side is the momentum predominant, right? Is the upside momentum dominating to the degree that any kind of downside just immediately gets overtaken and pushed back up, or is the downside overtaking the upside? And so as you can imagine, hanging out in the red in this negative momentum bias zone is what bear markets tend to happen in bear markets. Hanging out a lot in the green happens in bull markets. And one of the kind of telltale things that you can see happen several times in the kind of these bear markets here and here, the more protracted ones, is kind of coming up, popping your head above 0 and then getting rejected down. Or, you know, popping your head above 0, getting rejected down. Kind of this continued bearish movement. Same thing here, not even getting above 0, rejected down, above 0, rejected down, above 0, rejected down. And we can see that actually transpiring just now, right? With this relief rally we had up to the high 40Ks, we actually popped our head above 0. We got up into the green, but then just immediately got rejected back in down to the downside. And that's, you know, not the kind of price action you'd want to see, obviously. You'd want to see us be able to start reclaiming this upside for us to be more believing of that move up. And so from this perspective, Bitcoin's also not acting especially bullish right now. We'd like to see that reclaim of positive momentum. And so from both the TCI's kind of perspective and the MBI's perspective, there's some reason to be concerned right now with the way that Bitcoin is behaving. Now, just to talk a little bit more about what's going on more recently, I think, my thesis ever since the beginning of this downtrend really has been that it's been broader macro conditions that have been kind of pushing down Bitcoin and also, frankly, the rest of a bunch of other risk assets as well. With inflation kind of really going heavy and then the Fed becoming more hawkish. And, just yesterday, Jerome Powell came out saying that they were planning on actually increasing the rate at which they were going to be increasing interest rates, which a lot of the market obviously did not react well to, because higher interest rates tend to be bad for risk assets. And then the faster you increase those interest rates, also the more stress going to put on risk assets. And so the market did not react favorably to this. So of course, Bitcoin kind of got rejected off of that 43K level we had been in, dropping back down below 40K. But then where the real kind of ugliness, at least just as seen on the chart, showed up is in the stock market. You can see how much the S&P 500, that's what I'm showing you here, down 2.77% today, down 1.5% yesterday. And, with the S&P 500, those are pretty big moves for a single day, really not reacting favorably to that move. Whichever index you look at, they're all pretty ugly. NASDAQ corrected heavily, Dow Jones moving down heavily as well. Now, that's probably just the market. The Fed increasing interest rates has been a known thing, and so a lot of that was priced in. The possibility of the Fed increasing interest rates a little more quickly, or people taking that more seriously, seems to be what the market is trying to price in right now. So we'll see where it finds that equilibrium. If it ends up, it'd be concerning if we end up going down and taking out these lows. I don't think that would necessarily have to happen, but we'll have to wait and see. The market's going to kind of have to figure that out, of what's kind of the amount of correction that's going to have to happen to price that in. What I see as being more concerning potentially in the longer run is looking at what the dollar has been doing recently. And you can just see that the dollar has been going absolutely parabolic since May of last year, just going on this crazy run to the upside, really making up for everything that it lost from going in that huge run that risk assets had in 2020 into 2021. And you can see that we're starting to break past these kind of prior resistance zones, right? This level here at around 100, we've now gotten above that. And we're starting to get back up to these higher levels in this kind of big range that we've been in ever since 2015. And the reason that this is concerning is that when the dollar is rallying, that tends to be bad for risk assets. When the dollar is correcting or falling, that tends to be good for risk assets. So if you want something like crypto to do well, you're really hoping for the dollar to be falling. And we're just not seeing that yet. The dollar really hasn't shown any signs of stopping its push to the upside. It seems like people are essentially just fleeing to the relative stability of the dollar in these kind of more bearish macro conditions, which has been pushing things up. Now, obviously, with the DXY, it's a little more complicated than that, because this is the strength of the dollar relative to other fiat currencies. It also depends on how strong those other currencies are. So sometimes that can make the dollar look stronger anyway. But regardless of what's pushing it up, generally speaking, there's that inverse correlation. And so really what we want to see is the dollar get rejected. But because it's pushed up above these kind of past resistance levels, we're going to have to be watching these higher levels to see if there's a place up here where it'll end up ultimately getting rejected. And then kind of the worst outcome for risk assets is if it just pushes beyond and actually breaks out of this entire range. That could be quite concerning if that happens. So the dollar is something that's very much worth keeping an eye on, in my opinion. Now, flipping back to Bitcoin, though, just thinking more about levels that we should watch and what we might want to be looking for. So obviously, we can just look at this from a technical perspective and say that we really would ideally not want to set in a low that's lower than this level here, right? We've ended in a technical kind of uptrend, more or less, putting in higher lows kind of consistently ever since this bottoming point in January, and then also been able to put in some higher highs relative to some earlier ones. But we get an invalidation of that structure should we break down below these types of levels, kind of the mid 37K, especially start closing down here. That would be quite concerning from just a technical perspective. But we can also look at on-chain data to get a sense of where is actually all of this actual support in terms of people's cost bases. The idea being that oftentimes people's cost bases act as a place where they'll come in to defend. Then cost bases can also act as resistance as you go up and meet them. And so what we can look at with this age band's realized price distribution, the realized price is basically people's cost bases. Realized price just means that someone spent their coin at a given point in time. The realized price is whatever the price of Bitcoin was when they decided to spend the coin. Then you have someone else who bought it. It becomes that person's cost basis, the new buyer's cost basis. So I'm filtering this to only have stuff a month old or older, just because this really young stuff tends to move around a lot, so you can't really infer that there's going to be all that much support based on, you know, coins that someone has had for a day or less. That's not really all that meaningful. So what we can see is that there's a decent amount of coins that live in this kind of area that we are right now at around the 39K range, which makes, I think, frankly, a lot of sense, because if we look, we spent a lot of time in this general range kind of more recently. And so it makes sense that there's a lot of these coins in the kind of 1 month to 3 month zone that live there. Now, these are not really going to be long-term holders per se, and so they might just be more likely to spend. So it's questionable how strong of support they're really offering, but it is just notable where they are. But I think we can see that there's a lot of kind of cost bases right around where we're at. This is kind of an important level. The 39K to kind of 40K region, there's a lot of coins here. And if we get rid of this cohort, we can actually see that when we look at 3 months and older, getting more into the kind of the long-term holders, it's really 40K and 39K that are kind of the closer ones here. And then a decent chunk of coins that exist down throughout the 30Ks as well. So you'd really like to see us hold the current levels, is essentially what I'm getting at here. You'd like to see us hold at around 39K, 40K, you know, at worst down into kind of the 38K kind of range. We start moving below that, we're going to start going into these levels here. And then that would lead to an invalidation of that uptrend structure, which would be, you know, also not necessarily a great sign. Now, one of the things that we can look at in kind of more long-term of to think about, how likely is it for us to kind of capitulate down below these levels, or certainly even fall below that level as well. And one of the things that I think is important to keep an eye on is what's going on with long-term holders in terms of who's in profit versus who's not, and then how much are they in profit. What we're looking at here is a short-term profit versus the long-term, or short-term versus long-term holder profit and loss metric. And essentially the darker blue and darker red mean are in profit. So dark red would be the short-term holders who are in profit. The dark blue would be long-term holders in profit. Light red, short-term holders in loss. Light blue, long-term holders in loss. What you can see is that, you know, short-term holders kind of tend to bounce around a lot, right? You know, a lot of them will be in profit as the market's moving up. A lot of them will be in loss as the market's moving down. And we're moving now to a point where there's kind of more short-term holders in loss than in profit right now. But what I think is almost a little bit more important to keep an eye on is what's going on with long-term holders. How many of them are in profit? Because you can see that once you start getting a big chunk of long-term holders in loss, so for example, going into 2018, saw that more and more long-term holders were sitting in loss at these points. And that kind of preceded this big capitulation to the downside, where a lot of long-term holders actually sold in this capitulation and then added to the short-term holder supply. And you can see that here, where the amount of long-term holders, combining these two together, dropped notably here, and then those became short-term holders as they distributed their coins to other people. And that's where you can get those really big capitulations, when long-term holders decide they're getting the heck out of there. But we can also look at when have those things happened. And so what I'm looking at here is the long-term holder realized price. So you can think of this as the average cost basis of long-term holders. And those kind of capitulations are more likely to happen as price is getting closer to the long-term holder cost basis, right? We see that this capitulation actually the price fell below the average cost basis of long-term holders here. And so what's fortunate for us right now is that we're still at a place where long-term holders are pretty comfortably in profit. And one of the things we know psychologically from prospect theory, I did a video about this a while ago, I'll leave a link in the description if you're interested. One of the things we know about prospect theory is that once people are at a certain amount of gain, they don't really feel movement all that much in terms of their subjective experience, right? If I'm at a 25x versus a 20x profit, it's just like, who cares if I'm shifting around in there? Just volatility. I'm still so healthily in profit that I'm happy. Obviously, the long-term holders on average aren't that much up on Bitcoin, but they're still sitting healthily in profit right now. And so, you know, they might still be at a point where kind of movements of Bitcoin's price doesn't really feel that different to them because there's still so much in profit that it just doesn't really matter. But what can happen is that the closer price gets to their cost basis, the more they're going to psychologically start feeling that. The more painful it's going to get for price to fall, the closer and closer it gets to their cost basis. And if we'd ever get to a situation like this again, where we're really narrowing in on their cost basis, that could be a point to get concerned. because that might mean that they're going to start feeling the heat and say, oh, shoot, I better just lock in profits while I can. This thing keeps falling. I don't trust it. I'm going to get out while I can to lock in profit. And that's where you get that actual capitulation by long-term holders that could really dump price to the downside. So I think this is an important thing to keep in mind. How much in profit are long-term holders? And we start to see these lines converge between price and long-term holder realized price. That can be quite concerning for what's going on. And then just keeping an eye on long-term holder spending behavior is also something that's important. So what's my overall evaluation? I mean, everything that I'm seeing right now points to caution, at least in the short term, right? TCI is bearish. MBI is bearish. Seeing bearish movements in the stock market. We are seeing, we're seeing a lot of movement on chain. And, fortunately, we're still far enough above this kind of cost basis that might not be as much of a concern yet. But at least in the short term, with some of this news that we've been getting, there's reason for concern. Now, none of this is financial advice. You should interpret this data as you will. You should make your own conclusions. But these are some of the things that I'm looking at. And I think it just is the case that while the broader markets are so bearish, I just think it would be incredibly difficult for Bitcoin to put in meaningful rallies to the upside. I think we're going to have to see something happen, some kind of a catalyst. Maybe it's the Fed pulling off of the accelerator, right? Kind of putting out some more dovish statements, or, deciding not to raise interest rates by 50 basis points in May. That could at least release some of that pressure and help allow things to rally. But even if that happens, there's no guarantee we go back to all-time highs by any means. I think we're at a very uncertain point in the market right now. And so with a lot of this volatility, trying to be too confident of anything in the short term, I think is going to be problematic potentially. And that there's going to be a lot of fake outs, both to the upside and probably both to the downside. So just a lot of reason for caution. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And remember, if we look at the data, I think we can hopefully try to navigate this market a little bit more effectively.